Welcome to today's episode of our e-commerce podcast, where we answer the burning questions that you e-commerce sellers might have, or you may not even know you have. Today, we've got a few guest speakers. We've got Andy Johnson, Jason Parr, and Dan Peisner. So welcome, guys.
Hey, hello.
Hey, how's it going, everybody?
Thanks for coming on, guys. I thought we would kind of talk today about how companies can determine, whether or not they have risk to having a sales tax audit.
Awesome. Well, let me start off in talking about this subject, and let me just keep preaching to the whole marketplace how important it is to have a Nexus study. And when we talk about Nexus studies, as we've talked about previously, it can relate to some sort of economic nexus. It could be physical presence nexus. It could be what we call click-through, affiliate, et cetera, et cetera. There's lots of types of nexus. And so as we continue to say, everybody who has customers in the U.S. in multiple states needs a nexus study. Part of a nexus study is, one, to identify what your footprint might be for some requirement to register, collect, and remit sales or use tax on your sales transactions in that state. But to really understand what your exposure might be, and similarly in relation to audit risk, you really need to understand the taxability of what you sell. And so as part of our Nexus study, we do a taxability review. In addition to that, to really know what your exposure is, you need to know what rates apply to your taxable sales. So we do a taxability review, and then we do an exposure analysis, which essentially identifies what your potential exposure is or what you should have been collecting. So once we do that, and we make some recommendations on how to become compliant, how to get registered, how to move forward, and again, always reminding you that we do that with the main concern in our mind is how to mitigate out-of-pocket taxes that you have to pay with penalties and interest. But once that's done and you're actually registered, you have a significant responsibility to ensure that, one, the items that you sell, which one of those items are taxable. It could be items or services. And also, it's important to determine at what rate you should collect. There's different types of rates that can be collected depending on how you're registered in a particular state. And so that's always an ongoing concern in relation to audit risk and exposure that you might have. And we happen to have a unique tool to help you really learn how to determine what your risk might be in a particular state. So, really, we can assist you in doing an exposure analysis, but you also can play a vital role in determining what risk you might have, both from an exposure analysis, but more importantly, once you're registered and you're trying to be compliant, how you move forward and determine if you have any audit risk. Anyway, it's called the START tool, and I'll just ask Andy to share a little bit about that.
Okay, great. Yeah, it's a tool we put together several years ago, and it's designed for businesses, all types of businesses, all types of industries, including e-commerce sellers. So it's a perfect thing to share in this podcast because it's designed for you to assess. It's a diagnostic tool to assess whether you're at risk for a sales tax audit, not for the audit itself, because you are at risk for that no matter what you do, but whether or not you may face a potential devastating assessment. That's what we don't want. So we have this START tool. So it's I like the word START, even though it's got a D in it, because it implies like, let's get busy on this. Let's figure out what our potential issues are. And if there are issues, then let's deal with it. A lot of times, I don't know what percentage of businesses that come to us where we basically tell them, no, not to worry. So it's not always, automatically you got lots of problems, but at least I could applaud them for coming forward and talking to us, or at least taking this test, because it will give you some idea of, is this something you need to worry about? So Dan, I'm looking for your input as we go through this. There's just 15 questions, so it's not a long drawn out. It doesn't address every possible issue. but it goes beyond just Nexus. It goes, first of all, beyond just Wayfair Nexus, economic presence Nexus. It gets into some other questions, but then we leave Nexus behind after about 6 questions, and we consider the other areas that might create significant exposure. So do you guys see this on my screen? Start tool.
Yep, I can see it.
Yep. So the last thing you want, well, you don't want to get audited, period, but sometimes that's unavoidable. But the last thing beyond that you want is an unexpectedly large assessment that could put you out of business. So we start with Nexus. That's why we wrote the book, Start with Nexus. And we want to know, do you conduct any of these very common activities that really create Nexus now and in the past? Sometimes people are hyper-focused on Wayfair and the economic presence rules and thinking, and you know, Wayfair has kind of brought these issues to the forefront, but not aware that there's other activities that might create Nexus as well, or do create Nexus. So e-commerce businesses that maybe in the past have been, we have several clients, very large businesses that have been purely wholesalers in the past, but have now opened up a channel of distribution through Amazon, for example, or other online providers, and now selling a substantial amount through those channels. And whereas you know, billions of sales were subject, they never worried about sales tax, it's all through other distributors, but now they have a channel that they sell direct to the consumer. So now they have other issues. So just talking about some of these issues, Dan, it sounds like you want to chime in.
Yes, I just wanted to emphasize what you just said, and you can't not be overstated that Wayfair really did get this conversation going. It got everybody looking at Nexus. It got everybody talking about Nexus. But a number of people that we've talked to recently really have, they're stuck on economic Nexus, but economic Nexus is a relatively recent thing. It didn't really, if you didn't have a physical presence, it didn't really exist prior to June of 2018 when the Wayfair decision came down, or at least it was not enforced as such. But the issues of having a physical presence either through sales representatives or inventory in the case of a lot of e-commerce sellers, that's been around for years and years. And we talked to a number of clients that just thought they were looking at some prospective registration, and we had to tell them, no, you may have some bigger issues here. So I think that bears repeating, because everybody really does get tunnel vision on the economic Nexus side, but you could have issues far beyond that.
Some good points. Dan, there's one thing you said that I just have to disagree with, though. You said this cannot be overstated. And I think that it can be.
Well, let me overstate it. I just want to echo what Dan said and just remind everybody, our number one goal is to help you get compliant without having to pay lots of dollars out of your own pocket that could have been collected from another person. And so we're always careful to understand if you had activities prior to economic Nexus that actually established Nexus for you in a particular state. So it's really important, and it cannot be overstated.
It's hard to overstate it, but we are capable of overstating it, and others are capable for sure. Anyway, minor point, just joking around. So there's other things other than economic presence, and that's what we talk about here. For example, a lot of people live in other states create Nexus. So that's one of the questions that we ask. And if they do, then we want to know, is it a company office, something in their home, or some other co-working situation? A lot of people don't realize that owning or leasing property to others, renting property to others could create Nexus. So that's important. Where your employees travel could also be an issue. Like, what do they do? Do they make deliveries, perform repairs? They do maintenance, consulting? Want to know, what do your employees do? And sometimes people legitimately don't know where their employees are. and they didn't realize it was even an issue. And sometimes if you already have Nexus for other reasons, then you don't really need to go there. So that's why we say not sure, because sometimes people just don't know and they may not need to know. Independent sales reps is another important factor in creating Nexus. And a lot of times it's a shock to people that an independent sales rep that is not my employee and not even my exclusive sales rep could create Nexus, and the answer is yes. So Wayfair has brought this to your attention, but the last thing you want to do is say, yo, I better get registered in all these states because X software company overstated the impact of Wayfair and they want me to register everywhere. So I register everywhere, and the states say, hey, didn't you have inventory or didn't you have independent sales reps back in 2014? Like, yeah, we did that. And boom, then you have liability in the past.
Hey, Andy,
I
just wanted to interject here. We had 3 conversations just this week with companies who were concerned about the economic nexus thresholds, who had third-party installers who were either installing tangible property or were incorporating tangible property into real property, and didn't realize that that created an issue for them. So the issue's out there. Just wanted to give a real-world example.
Yeah, and we're not the Nexus police, but we want to make sure you're aware of potential issues that we may need to navigate, all right? We do have our Wayfair questions in here. Questions 5 and 6 have to do with just exceeding thresholds of 100,000. Now, it's not to say that these are the definitive rules in every state. States have different rules. So we say, do they exceed 100,000, knowing that some states are 500,000? At least we get the conversation going, give you something to consider. And then not every state has a 200 sales transaction threshold, but many do. So that's why we asked that question. So like I said, that we, there's probably 100 questions you could ask when it comes to Nexus, but these 6 questions we find are probably the most important questions. All right, so let's move on. Unless you guys want to keep talking about Nexus, we always say let's start with Nexus, right? So let's get to some other issues. Sales tax rates. So you may have Nexus somewhere, and if you do, then you need to know what sales tax rate to charge. But if you're a pure Amazon seller, for example, and everything you sell is as an FBA seller, then sales tax rates is probably not going to be a big issue to you, because Amazon will automatically populate the correct sales tax rate based on the destination of your item that you're selling. So for some of you, you may not even know that there's over 8,000 taxing jurisdictions in the US, and that it's complicated to decide what tax rate applies to any given transaction. And you may not need to know, because everything you do is through Amazon. But for others of you that sell through Amazon, through your own website, through your own brick and mortar, through other platforms, Walmart or eBay or what have you, sales tax rates is a big problem. So we want to identify, to make this more of a universal question to decide, is this something we even need to talk to you about or you need to be concerned about? We'll ask you, is this an issue for you right now? And if you say no, then we'll tell you, well, if it does become an issue, here's what you ought to talk about. Or you may already know, because you've struggled with this, that determining the appropriate tax rate is currently a serious problem for us. We know it's a problem. Then we know what we need to talk to you about. And we'll give you, there's a report that comes automatically as you complete this that will give you some ideas of different directions you can go as regarding rates. But at least it's a start. So you know if this is something you need to worry about. If you do, if sales tax rates is an issue, we're interested in, how do you get your rates? Do you subscribe to some sort of automated system? Or are you in the category of people, and believe me, there are a lot of them like this, that either look it up on Google or try to call the states and say what rates apply? That for certain types of sellers, that's completely appropriate. They just have one rate they need to stay on top of. But for many, sellers, particularly in e-commerce space, it really makes sense in most cases to automate that function. When we get beyond tax rates, Nexus and tax rates, things get a little more complicated. We talk about taxability. So Dan, why don't you cover these questions and why we're asking these questions?
Certainly, Andy. So the first and most basic question is, what types of items are being sold? And this is very important because when we look at taxability, we approach it from two different directions. When we're talking about tangible personal property, any tangible goods that you sell, they are typically presumed taxable unless a specific exemption applies. And in the case of e-commerce sellers, this can mean food items in some states. This can mean dietary supplements in some states, although you have to be careful on the definitions. They can be a little across the board. And this could mean even candy or soft drinks, depending on the state, as to how they are taxed. Whereas in the case of services, only specific enumerated services are typically taxed in most states. Now there's, as with all things in the world of sales and use tax, there's always exceptions, but this can help to better scope the taxability issue. And then you get, sometimes you get some sellers that sell a mixture of both and related or unrelated services. And then you also get digital goods, which are a little bit newer. Some of the states tax them just like their corporeal counterparts, and some do not. So we ask all these questions to help flesh out that audit risk a little bit. And then we also ask the question as to, first we ask what you sell, and then we're going to ask how confident you are in the taxability, because that can be, as some of our clients can attest from this week, the issue of taxability can be a little bit of a rabbit hole. So if some things like widgets may all be perfectly taxable, but again, once you start getting into the issues like chocolates or getting into supplements, then that can be, that's something that we want to see. Have you looked into it? Are you very confident on your taxability on that? Or is that something that you're not sure about and want some more information regarding?
Yeah, so that's why, for the start tool purposes, there has to be more of a universal question, because not everybody, if you just sell, like you mentioned, Dan, straight widgets, straight tangible personal property, then by and large it's taxable everywhere that has a sales tax, unless there is some exemption. We'll talk about that a little bit later. It's not that complicated. But if you mix in services or digital property or certain types of tangible personal property like supplements, nutritional supplements, or types of food, then all of a sudden it does get pretty complicated. So not everybody recognizes that the rules are different. And so you got to be careful how we put this, because I'm not trying to insult people's intelligence or make them feel like we are. We just happen to know a lot about sales tax. So we want to make sure we're covering lots of different issues. You see so many companies popping up now that are sales tax experts, but once you get beyond very basic, very small sellers, there's lots of issues that come up regarding just taxability of different products that you sell, what tax rates apply. If you go beyond anything other than just pure Amazon, then it does get complicated right away. So that's the issue of taxability. And I mentioned exemption certificates. Dan, you want to cover something in here too?
Certainly. So with exemption certificates, we're already talking about those taxable widgets, and the law says you're registered in that state. You've got to collect tax on those on every sale of a widget into the state, unless you receive a valid and completed exemption or or resale certificate. In some cases, it's enough to, if you know you're selling to a governmental entity, to just use the, if you've got the entity's name and it was paid on state funds. But typically, you want to get a certificate for each of those to memorialize the tax exempt characteristic. And so we ask a very general question to determine whether there's risk in this area, to see if you're making if you're a business that just doesn't make a lot of tax exempt sales. You don't have a lot of churches you sell to, you don't have a lot of governments that you sell to, then this may not be an issue of concern. But if you do, then we first want to find out how significant or material is the issue. And then we want to inquire, we're going to ask a question about your sales tax certificate collection, because this is an issue that dogs a lot of our clients. There's always a question of getting every certificate. Is it collected at the time of sale, or 90 days afterwards, or whenever somebody realizes that they didn't pay the tax? And I know Amazon has, depending on your Amazon settings, is getting those can sometimes be problematic. And then if once you look at collection of the certificates, we also want to look at retention of the certificates. Do you keep them in a binder near your AP person? Do you keep them electronically, or even are you checking with some of them to make sure that they're updated? Some certificates have expire after a year, some expire after 3 years, some are effective until get notified that they're revoked. So those are all areas that we ask about to look for, again, for audit risk.
Mm-hmm. Yeah, because this could be the easiest area for sales tax auditors to hit you with a disproportionately devastating audit assessment. But for some sellers, particularly smaller sellers, this just isn't a big deal. And so we just try to kind of alleviate that concern right off the top. Yeah, and when you get the report after you fill this out, you'll realize whether this is something you need to worry about or not. The last area that sometimes is a real surprise to businesses, so the way that we word this question is deliberate. And we don't ask a lot of questions here, but just know that in a sales tax audit, auditors always look at your purchases to see if you're paying tax to the vendor. And if you're not paying tax to the vendor, then they're going to want you to have paid tax yourself, self-assess the tax, which to many businesses, smaller businesses in particular, like, what? How is this possible? So the way we word this question is, which of these describes your current process for accruing and remitting use tax? Now, a lot of times this jargon can be confusing to people, and they're not even sure how to answer the question. That's why we always say not sure. Because you may just need to hear, what do you guys say about this, so I can understand if this is even a concern. So if you know, hey, listen, we just pay tax to our vendors on the invoice when it comes, and we don't have a separate process for self-assessing use tax. Okay, sounds fine. Or you might say, we do have a system. It's a manual system where we look at our biggest purchases every month or every 6 months, and we accrue use tax as needed. Okay. Or, the larger businesses might have an automated system based on the account that it goes into, and a very sophisticated, simple system. Or others, you might say, I'm really not sure that we really have a good handle on this whole use tax thing. Didn't even know it was a thing. So that tells us how we need to answer this question. So if you are a smaller FBA seller and that's all you do, you may not have a use tax exposure problem, meaning you have tax you should be paying. You may have a situation, especially if you're a drop shipper, and then you can verify this, where your vendors are charging you sales tax simply because they don't have the right exemption certificate from you, and you may be overpaying use tax. Don't you think, Dan?
Yes, Andy, that's a very common issue with certain states. The problem of not being able to uh, issue a resale certificate if you're buying goods and having them drop shipped directly, or even if you're on the other end, if somebody's buying from you and having it drop shipped, the certificates can become a big issue. And I did want to mention in the context of e-commerce sellers, usually where you'll run into this use tax issue about accruing and remitting it is going to be in your home state. Whenever your home state always seems to be the one that tries to audit you because you're a known entity. And when they do audit you, not only do they look at your sales everywhere, but they're going to look at your purchases. So they'll look and see if they'll want to see invoices for all of the goods that you've purchased to see if you've been paying tax on there. And then that's where a use tax system can come into play. And that's really what this question looks for.
Yep. So the very last question is kind of like a reality check. So this is a self-evaluation tool. It's total of 15 questions, 14 questions that have to do with sales tax. And number 15 is, hey, just acknowledge you realize these questions cannot cover every possible item that could come up in a sales and use tax audit, right? And you choose the answer, yes, this is just an overview and every company has unique facts. Yes, we understand this is not a specific consultation based on our unique facts and circumstances, or yes, we get it. Now, when you fill out your first name and last name and your email, then you will get your report immediately customized based on the answers that you've given. So I think it's really helpful for businesses, and if you are an advisor to e-commerce businesses, just to use this tool, and you don't necessarily even have to have your clients fill it out. You can just work through this, and I really think that these are the biggest questions that you should be asking in your initial assessment. So what do you think, Jason?
I agree. I just would amplify that. I think there's a lot of value just in walking through these questions yourself. It highlights from a broad perspective what an auditor would focus on. It also provides some insight on what we will focus on to try to mitigate exposure for you in a Nexus analysis process. And the report itself provides some additional education and understanding. It's a really valuable tool to help people understand how to navigate the marketplace and where to pivot and what to do.
All right. Well, thank you so much, guys. I know this is a very valuable tool, and the report is very valuable as well. And I know this is a culmination of over 25 years of sales tax experience specifically. And if you want to use the tool, the link will be available kind of down below in the notes, and also if you go through the tool and you're listening to the questions and you know you're in trouble or have potential of being in big trouble, there's also a link you can just go ahead and schedule a time with us. So again, thank you for listening, and thank you guys for being on the podcast today. We'll see you guys next week.
Bye, everybody.
See ya.
Bye, everyone.